praying for a recession. Please give me a recession, right? What's going on, guys? Hope you're having an absolutely fantastic day. So in this video, we're going to be talking about the state of the US economy, some shares that I'm accumulating, as well as some practical advice to increase your net worth, right? So let's start off with the US economy. And before that, just a disclaimer, right? Obviously, no one can predict what the stock market is going to do or what the economy is going to do, right? But I think we can take some of the data points and make a mental model of what's going to happen, right? So US economy added 175,000 jobs, way below expectations. Expectations were around 230,000. So this is around 25% to 30% lower than expectations. And as you might have expected, right, the stock market went down on this news, right? Just kidding. The stock market was up 1.26% on this news. So that's what I was trying to say, right? You cannot predict what will happen, right? But in my opinion, this is not a healthy move, right? Basically, what this move translates to, in my opinion, is that people think that, okay, the job market is slowing, so the Fed is going to start cutting rates soon, right? Which I don't think is a very good idea to keep betting on multiple expansion when the multiples are already this stretched, right? So just for your knowledge, usually the S&P trades around 15 to 17 times earnings. Currently, it's trading around 26 times forward earnings, right? So the other thing I want to take a look at is the inflation report. So basically, inflation didn't come as people expected it. People expected it to go straight down to 2%. Now it's bouncing back up. So we'll see how high it goes, right? But I don't really think 3.5% inflation is a huge problem, right? Obviously, this can be understated, or how the inflation report is built is not really reflecting on how the consumer is feeling. But I think 3.5% in the Fed's eyes is not really that big of a deal that they are going to have to go like, oh, we're going to have to hike some more, right? So another thing I want to talk about is that maybe this jobs report is kind of telling us that some of the Fed lags are finally catching up, right? Or maybe it's just seasonal, right? Who knows? But in my opinion, I think some of the Fed lags are finally catching up, right? Because why did it take so long this time? Possibly my theory is just that the consumers had a lot of stimulus checks this time, right? What we did was completely unprecedented. So I don't think it will be tried again in the next few decades, right? Unless our politicians forget this lesson. By our, I mean the US politicians, right? Because currently we have credit card rates at sky high levels, credit card defaults at sky high levels, like highest it's been in the past few decades at least. And then we have the auto delinquencies very high, right? So I don't have all the charts open here because I already had too many slides open, and quite frankly, I forgot to open them. But do I think we're going into stagflation like everyone is talking about, right? I don't think so, because stagflation rarely happens, right? And when it happens, it's because of an external shock, right? And if I see that the employment data is going weaker and weaker, right, means probably the wages will follow down, and the cost that it takes to get workers will go down as well, right? So that will also drag inflation down, right? So why stagflation is so rare is because when there's a recession, usually inflation will not stay up. The whole point of raising interest rates is to slow down the economy so that there's a slower market activity, so inflation will follow down, right? And when you have a recession, meaning a negative GDP, right, obviously the economy is very slow, right? So inflation doesn't usually follow that, right? And normally if you have stagflation, I would say that your inflation would be like 8, 9, 10% before we can call it stagflation, right? 3.5% inflation with slowing jobs, it's not really stagflation, right? So next, I want to take a look at some stocks, right? And this is building on my thoughts that we were in a very frothy market, right? So you can see that last week, in the past 5 days, XPEL, this stock is not a huge stock, but quite popular among the retail investors during the COVID bubble. This stock is down 42% in the past 5 days. And the bulk of it came 2 days ago, right? Or 3 days ago, right? You can see that it was down 40% in 3 days. So you can take a look at Meta, same thing, down 11%. Obviously, Meta is not down 40%, right? But 11% for a mega cap like Meta, 1.1 trillion market cap, at this point, right? It was like 1.3 trillion before the drop, right? And then you can take a look at Starbucks. It's also down 17%. So before we went into this earnings week, I did mention that the market is a little frothy, but I'm not trying to be biased, right? Because there are a lot of stocks that went like up like crazy, right? You can see that Apple went up like crazy. I think Amazon was roughly flat, but Google went up quite a lot as well, right? And these are like 2 trillion, $3 trillion companies. So I'm not saying that, oh, just because all these stocks are down means the market is frothy, right? Because there is still some outperformance, right? Although Apple's, I think it wasn't that good of an earnings report. It's just that they announced a huge share buyback, right? And I think this is like Apple hollowing out its balance sheet to do share buybacks, right? So I don't think that's a very good thing, right? So let's talk a bit about the stocks that I'm accumulating, right? So one of it is Evolution AB. You can see that after the earnings, right? Actually, even though the earnings was better than expected, the stock is down roughly 10%, right? And this is a stock that is trading at 20 times earnings. So their free cash flow roughly matches up with their earnings. So I'm just going to use earnings, right? Normally I use free cash flow. So this is a stock that's trading at 20 times free cash flow with around 23 to 25% return on invested capital, right? So to me, I think it's quite cheap. Next, we have HIMS, which was down 8%. So I actually didn't buy anything yesterday because I was asleep here, right? So here to here, it's not really that big of a deal because I actually bought the day before, right? So I bought at 11.75, so it was like 11.90, so I just didn't touch it. And then after I slept, it was down another 5%, right? So if on Monday market opens, the pricing is still like this, I will add some more shares, right? And lastly, BABA. I haven't been really adding to BABA, but it's a stock that I want to talk about, right? Because you might have remembered after the last HIMS earnings, actually I sold some HIMS here, and then I built back my BABA position. So what's happening with BABA now is that there is like some kind of support here, right? And then it's breaking out. You can see that it's up actually like 20% in the past. I think this is like 1 week or 2 weeks. Yeah, 2 weeks. So I think there's some signs of life for the BABA bulls, right? So we don't know what will happen because as you can see here, right? Here actually it went up like 100%, right? Yeah, 110%, right? But it still went back, retraced all its gains and gave up all its gains, right? So we won't know, but I think this is some early signs of life, right? Especially when you take a look at Apple's China business. It's not as bad as people expected, right? It's still bad. It's down like what, 9% year over year, but people expected like down 13% year over year, right? So might we see some recovery in the China sector? Who knows, right? So next, I want to talk about this is a potential stock that I'm looking to buy, and it's Wise, right? The only thing I can't get around with this company is the valuation, right? Because actually you can see that the PE, which is roughly the same as the free cash flow, is quite high, right? So I'm still doing some research on it, and I actually have a full video dedicated to it, right? Which I'll release soon. But let's talk about if the US went into a recession, right? Because you can see that Europe is in a recession. Japan was briefly in a recession. UK was also briefly in a recession. So first, let's differentiate between a shallow recession and a deep recession, right? A shallow recession is like 0 point something percent, 0.1 to 0.5% for 2 quarters. I would think that's a shallow recession, right? But if you have a deep recession, which is like 3, 4, 5% GDP decline over the course of maybe 2 years, that's a deep recession, right? And that's actually where you will get a lot of the opportunities, right? Because GDP might contract like 3, 4%, right? But a lot of these companies' earnings will contract like 50, 60, 70%, right? So that's why you see like sometimes in the recession, the shares just absolutely tumble, right? But the earnings power of the company is still there, right? It's going through temporary headwinds, right? So that's where you get your opportunity, right? So I'm not saying that you should be praying for a recession. Please give me a recession, right? But the thing is, it's actually the best thing that could happen to a investor which is in their 20s to maybe their late 30s or maybe early 40s, right? Because you can see that this is the accumulation phase, right? Which is the time in our life cycles that we will be accumulating assets, right? When you're past 50, 60, obviously you hope there's never a recession, right? But as we know in history, there will always be a recession looming around the corner, right? Because good times will eventually create bad times. And currently, we are having the longest streak without a proper recession, right? And I don't consider the COVID recession really a recession, right? It's like a flash crash and then like emergency measures, and we're just out of it, right? But we haven't seen a proper deleveraging, right? Like you let all the zombie companies, all the bad companies really fail and let capitalism do its job, right? But every time we are having some sort of thing that is close to that, all the politicians are like, oh my god, we can't let anything tumble, right? We can't let this company which has 400 billion of debt tumble, right? Just an exaggeration, obviously. But you can see that in China, that's what they did for the real estate companies. And after they actually let it tumble, now it's having very detrimental effects. But I do believe China will get out of this stronger, right? So during all the recessions and all the bear markets, those are the times when you want to accumulate the heaviest, right? Because you can see that during the time where Bitcoin went down to 15K or 16K after FTX collapsed, no one was interested in Bitcoin. And if you bought then, you know the price now, obviously you would have done really, really well, right? And unfortunately for me, I didn't accumulate any. I was about to buy GBTC at a 50% discount. Actually, funny story. It's still on my YouTube channel, right? So I'll just link it on the top right. I was about to buy it, and then there was one day it was up like 10%, and then I decided, okay, I'm gonna wait until it drops maybe back to where I wanted to buy it at 50% discount, right? And I think when I was talking about it, it was like $9, and then it was like $60 last time I checked it. So that was a bit painful. So my inability to pay up that 10% cost me a lot of money, right? So, but I think we all make mistakes like that. So the next practical advice is to increase your income, right? Because not everyone can achieve very good returns, right? My meaning when I say very good is above 20% a year. And then you can always achieve like 20-30%, and 1 year you're down the same 20-30%, and that's 2 years wasted, right? But what I'm saying is most people can increase their income, right? And I have a friend, he's living in Australia, right? And Australian minimum wage is $23, right? If you are someone my age, that's the best thing you can possibly do, right? Because if you think about it, what else are you going to do that is basically risk-free and you make $23 an hour, right? It's just insane rates, right? The reason that I'm not doing things like this is because in my country, my minimum wage is like $150 an hour, and that's just not going to cut it, right? Trading and investing makes me more money than that, right? So we always have to pick the best alternative that we have, and not be like, oh, this person has this opportunity, this person has this opportunity. Just focus on yourself. What's the best alternative you have? What's the best career or job path or side hustle that will give you the highest hourly rate, right? Don't forget, at the same time, you can take obviously 70% of your max income, but you enjoy the journey, right? Like just an example, right? If you work a job for $100 which you don't enjoy versus you have a side hustle for $70 an hour that you enjoy, right? In my opinion, it depends who you are, but you can always pick the $70, right? Because you're going to last at the $70 mark for longer, right? Because you enjoy the thing, you actually want to show up to work, and you can last in the hustle longer, right? So with that being said, that's all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.